Well, I think from Azora, we are approaching this vintage of investment in two ways, right? On the one hand, we continue to see a lot of opportunities in our long-term convictions, right? And what are those long-term convictions? Well, the first one is residential and the world of living. There's a huge lack of housing, particularly lack of affordable housing in the Spanish market. But when you look beyond traditional housing into student housing or nursing homes and senior living, there is also a huge lack of supply. There is a need for all of us in the industry to invest in those sectors, to create more product that fits better the needs of those clients these days. So residential and all the different aspects of residential is something that we see a big opportunity, and we are currently investing quite heavily. The other big long-term conviction for Azora is the world of tourism and leisure. And if you recall, we have a big fund, the largest fund in Europe to invest in leisure hotels. That fund is now fully invested, and we are very keen to continue investing. The opportunity in Europe continues to be massive. The sector is highly fragmented. It's a very specialized sector, and you really need investors like Azora that understand the location and can then take on assets that are in fantastic locations and upgrade them, both in terms of the physical asset, but also in terms of sophisticating the way those assets are managed. Tourism continues to be one of the largest industries across Europe, representing anything from 12 to 20% of the GDP in countries like Spain, Portugal, Italy, Greece. And we continue to attract new tourists from America, from the eastern countries in Asia. So big believers in the tourism mega trend and willing to continue investing. And then at this time of the cycle, we also are starting to see great opportunities in more traditional asset classes. We like logistics very much. We like what we call niche offices, or offices that we can cater towards areas and sectors of the economy that are growing very fast, like education, for example. Retail, we think there's a lot of value in retail these days because prices have corrected so much. And the third thing, or the fourth thing I would say, where we see big opportunities is in everything that is related with energy transition and digitalization. And there we have a big focus in data centers. A lot of people talk about data centers, and we believe that our approach, because of our understanding of the renewable energy industry and the Spanish grid or the Iberian grid, gives us really an edge to invest in that sector. We think Spain and Portugal is very well positioned for data centers. And, we're not the only ones looking at the sector, but there's certainly a huge need for additional supply. And so we'll do our share on that. I think that the biggest challenge we face today as a market is the fact that there is not that much distress in Southern Europe, right? When you look at this correction of interest rates going up, of course that has affected everyone. But there are a few countries in Europe that had taken on huge amount of leverage because prices had gone up a lot, and therefore investors were really relying on high leverage to achieve their returns. And those markets, there you are seeing a lot of distress. The biggest one in Europe is Germany, which is also the largest investment market, up there with the UK, right? A market that had gone up a lot and had taken on a lot of leverage. Sweden is another one, to some extent a little bit in the UK and France. Southern Europe, maybe because we learned our lesson from the last crisis, it's not over leveraged. We can talk about our government, that's different, but companies or families are not. So there is not a sense of distress in our markets, and that is the investors are trying to look for that distress that interest rates going up has created. So we need to really make our case as investment destination based on what I was saying before, based on the lack of supply, based on the opportunities to still improve and institutionalize the asset class, and based on the fact that because families and companies are not levered, we can drive rental growth And in fact, our economies are growing faster than Central Europe. So I think the challenge is to explain well the investment case at a time when clearly rates going up have created distress in certain markets. Well, I think the district has earned its rightful place in the in the ecosystem and the calendar of conferences. I think the fact that it happens not in Madrid or in Paris, but actually in Barcelona is also something that is very, very welcome. Barcelona is an amazing city, and attracting so many people, both from Spain but also internationally, to Barcelona is very important. Getting us all together is always very useful, very interesting. It's very efficient. You can meet everyone here. And then I also would say that the district does a very good job in choosing the topics and in really picking up what is it that as an industry we want to discuss collectively. I want to know what other people think about alternative financing, about distress, about, and the time of the year is also very good. We are all kind of warming up to the new academic year, right? So it's a great event. I congratulate the organizers, certainly Juan Velayos, who has pushed for this for a long time. And as Azora, we are honored and delighted to be part of it every year.